All right, last but not least, I'm going to be going over targets I like and how I find my bias and draw on liquidity using higher time frame versions. So bias is not important. Finding draw on liquidity is 10 times more important than bias. Okay, you can have a bias and be wrong, but you can know the draw on liquidity and you can print just off that. Okay, so I use the draw on liquidity same way as I use entries on the lower time frame. So the same thing I look for in the 1 minute to the 5 minute, I'm still using on the higher time frame. So for example, we have an hourly inversion here. I'm literally just on the hourly chart the time I'm making this video. I look to the left, I see that we swept this higher time frame low and we got a nice singular inversion. It broke with the time momentum, so therefore I'm bullish. And you can even see my indicator alerted it, and it gave this a B plus grade, okay, with a sweep, a PD array delivery, momentum, okay, which means there's a ton of volume that came in, and an IVG, okay. So you can see right here, right, that this would be, make my draw on liquidity bullish. Now, where's two draw on liquidities? Fair value gaps and highs and lows. So once this breaks, right, and once that closes above, where my draws on liquidity be? This next fair value gap right here, and then the next high or low, right? We got a New York AM high that my indicator marked, so it'd be this, and then we got a London high that was untapped up here. So I'd have this target, and then runners for this New York AM high, and then runners for this London high up here. So that is exactly what I would be marking out for targets. Now, my favorite targets always engineer liquidity. There's a huge difference in targeting this versus targeting this. Okay, I like to target this, not this. Because if there's a high that took out another high to the left, and maybe there's a fair value gap right here, okay, there's 10 times more of a chance some high that failed to hit another high will be hit rather than this high hit this high. Like there's a 10 times more chance this is going to be hit rather than this. Okay, so like see how right here we have this high right here and we have this high, and see how they're engineered, right? If I turn my indicator off, see how there's a high and then there's a consecutive high. But if it looked like this, I would not like that as much. Okay, I would not like that as much. Okay, I like this. This is the main thing I target. So I target this. I target highs inside old fair value gaps. So see how this is a high that rejected an old fair value gap right here. Those are my favorite. And then data highs and data lows, which are, I talk about in my boot camp, which are basically 8:30 red folder news events that form just wicks that are like 5 points or more the second the news drops on the 1 minute chart at 8:30 or 10 o'clock, whenever the news is. Okay. So yeah, I like to target this wick because it's a high inside of fair value gap. And not only is it a high inside of fair value gap, it's also engineered right here. Okay. So it's engineered liquidity as well. And yeah, that's pretty much it for targets. Again, if I use the 4 hour and the 1 hour mainly for bias, occasionally I'll use a daily, right? See how we had the other day we actually had a inversion to the downside on the daily chart, and I knew this next internal low would hit. Okay, if we go to my index hunter here, look at this. I said I'm pretty sure this daily close is bearish. We close below, my indicator alerted it. Where's the next target? This low down here, and you can see we go down and we end up hitting the low that later that day. Okay, so I barely use the 4 hour, only when there's a giant hard time frame inversion on it, which there was here. And yeah, that's pretty much the only reason why. Again, same thing with like here, right? Higher time frame, 4 hour fair value gap. It's pretty obvious. It broke with a death candle, right? Where am I targeting? Here. Is this engineered liquidity? Not quite, but at least it's not liquidity that's like targeting a low that took out another low here, right? This would be a much worse target if we had this, but because it's just a single low, it's a little better, okay? Same thing right here. We have a higher time frame fair value gap we close above, right? So for bias purposes, I'd target higher. And do we have engineered liquidity? Yes, we do, right? See how we have a little trendline liquidity here. There's consecutive highs. And then you can even see it runs to over here, which we have the highest high over here. So like once we hit this high right here, this high right here, it's going to create a domino effect and run all these highs at the same time. And then this is where I will look for a lower time frame, like 1 minute, 2 minute, 3 minute, 5 minute entry. Like when I know the higher time frame closes here, right, at this blue, right, I'll look for the lower time frame entry in the red. Ideally around New York market open. Now this one happened to be Asia open, so really couldn't get in, but that's kind of the idea. Okay. Same thing with this giant higher time frame for value gap. Absolutely gets V-shaped through, smashed through. So where do I think the target is? It's going to be here, and I'll look for lower time frame setups during New York session right here. Once I see this candle closes above here. Okay. Now, I usually only check this when I wake up in the mornings at about 8:30 a.m. Eastern time. I really don't check any time else. The more you trade, the more you might want to check during Asia, the more you might want to check during New York. Maybe you'll get advanced and you do that, because occasionally I will do that, but for beginner purposes, this is what I do to find the higher time frame bias. And like I said, targets, data highs, data lows, make sure it's engineered liquidity, trend line liquidity. And then another good one is a London high, London low, Asia high, or Asia low. Okay. So those are going to be the main points to draw on liquidity at target. Write that down. I'm not going to write it down on the chart because I want you to take your own notes, so they're going to be in your brain better. My indicator, luckily enough, marks all those for me, so I don't really have to mark them out. If you are interested in my indicator, it's like another package on my WAP. It's about $40 a month, but you don't need to. You can mark them out manually if you want. Right? It has the New York AM high marked out, and it has an untapped London high that it marked out up here. Okay. So that's gonna be it for the how my strategy works. That's basically just a basic rundown. I go way more in depth in my mentorship. There's a couple YouTube videos I explain it more, but that's gonna be the basic strategy that you guys should know. As I said in video one, I told you what to watch. This should help. The only thing now left for you to do is backtest this, figure it out on your own, and kind of take what I'm saying and maybe adapt it to your own personality, because a lot of people in the trading space, like PB, Trading Lewis, even these, a lot of other people, bro, they just they learn that, like they learn what I just told you, and they all learn from me, and then they create like their own rendition of the model, and they end up renaming it. I'm never going to rename my model. I wish I could, but I'm never going to do that to ICT, bro, because he was the one who taught me. And I didn't learn my model from him. I learned my model from my own rendition of ICT. Okay, so like I actually did put hours of backtesting that. And then everyone else pretty much took what I had and then created their own rendition. So, pretty funny. But yeah, go create your own version of it. My version is a good starting point, okay? And watch the ICT 2022 mentorship when you can. And the next step really is just to watch my live streams. Okay, watch my live streams, because you're going to see me talking about the strategy and how I use it, and you'll kind of see I'm more focused on drawing liquidity, and then how can I find an inversion to get into the drawing liquidity. So that's going to be it for now. Thank you guys for watching this little mini series on how my strategy works, and let me know if you have any questions in the Discord. Peace.